So learning to use volume is probably one of the most difficult things to learn in the stock market. It is essentially extremely accurate, and at the same time it varies, right? It's so hard to have any complete accuracy in the stock market, but it's one of those things where it really gives you an edge, especially if you include it with other variables in your trading like support and resistance, trend lines, whatever you want, right? If you include volume, you should definitely see some more edge in your strategy. So I want to talk about three things that I look for when I'm using volume, right? Capitulation, exhaustion, and then even some walls, right? Sometimes you'll see a barrier or a wall come in the market, and the market will just be unable to push past it, right? Demand is just greater than supply, so the path of least resistance is to the upside. Exactly that, right? So a lot of times, or essentially a wall really is one large order or many orders at one level the market's unable to break, right? Or the market does break it, and the wall is essentially a sponge. It absorbs a lot of the momentum that's in the trend. So if we look over here, and we're trending down, okay, and then all of a sudden we get a slowdown, and then we start trending up. We're gonna see in the volume right here. Okay, I'll give you some examples later of exhaustion, capitulation, walls, also known as stopping volume. Right? If you ever read Anna Culling's book, she calls it stopping volume. You'll see that a lot in her book. But walls essentially. So let's say we have normal volume. Right? You already saw the capitulation, and now you're seeing force to the downside. Right? You're starting to see some force, and that's this would essentially be like exhaustion, like we're having the force and now the sellers are tired, and then we see the move up, right? Let's see if I have a way to erase this. Yeah, I'll just go like that. So that would essentially be what exhaustion is, right? Exhaustion is essentially when you have force, you have high volume forcing this thing down. Okay, high volume is pushing it down, and then now that volume gets tired, and then essentially you see pick up to the other side, right? And then that can drop off as well. So that's essentially what exhaustion means. Exhaustion means you have force that's turning something in maybe the opposite direction, or that's pushing something, and then when that force dies down, the market's only place to go is in the opposite direction, right? Because that was either the place of the trend, or essentially that's where the path of least resistance is. That's essentially what exhaustion is. And exhaustion, I know I said in the place of the trend, but really exhaustion is a continuation indicator. Okay, like if we see the market go do something like this, let me actually do it so we can see the volume. Do something like this, then we're coming down, we're ranging, and then we come back down here, and etc. Then we see another leg like this, right? Essentially the volume should look something like this. You should see force, and then you should see less force, less force, less force, maybe some some playing around here, and then more force, right? So the exhaustion phase is essentially this whole down move in the volume, right? And people that trade pennies and stuff like that, it's the same thing. You'll see force, and then they'll call it a low volume pullback or whatever, but essentially that's what it is. The market's just exhausted. It's lacking real follow through in the opposite direction. In any sellers in this bullish trend, it's lacking real follow through, real force. All the force is in the actual leg, right? It's in the actual bullish trend. It's not in the opposite move. So that's essentially what exhaustion is. And if we were going to see capitulation, right? Capitulation is no longer a continuation indication, right? Capitulation is profit taking, and essentially maybe really it's a reversal indicator, right? So if you just like how we had the trend down and sideways and then up, it's the same thing. Capitulation is actually a reversal indicator. So you will see less force as we're coming down, or less force at the beginning, right? But as you come down in the trend, you're going to see more force coming in. See how that works? And the best capitulation events are actually going to be following force through the entire move. If there's increasing, this is an, I'm telling you, if you see this trade where the force is just completely following through the entire pivot, guys, that is a 100% reversal, okay? But the majority of the time, you're not going to get that. Majority of the time, you're going to get something like this, where you see force coming in to just turn it around, and then the force will kind of be steady, and then you'll get some force come in, and then it'll die down, and it won't exactly be cookie cutter, right? But the more that, like I said, the more that the volume actually follows through, like the more that the volume actually wants to increase throughout the whole move, the better this trade is going to be. I'm telling you. This is so think of it like this, right? We have now encountered to where the sellers here, okay, the sellers that were here and taking this thing down are encountering, and they're, well, essentially they're taking the money, right? So you see some volume of profit taking, right? Let's just say that's some volume profit taking, as well as profit taking. Possibly they're actually taking profit at a level where buyers would also be coming in, right? So then you have buyers also getting confirmed that the level's being held, and essentially then you have the squeeze of all of these shorts that were here that have not taken that profit yet. Then you have the squeeze. So this is a trade. You see a trade like this, that is essentially a trade, okay? So one more time to recap. We'll make 3 little sections here so you can kind of see, okay? Exhaustion is more or less force and then a die down of force, and then force and then a die down of force. It's a continuation indication, right? That's what exhaustion is. The move got tired, it's resting, and because it's resting, it's gonna pull back a hair. You know, it's gonna pull back a bit. I've seen, you know, maybe it'll go into a discount, or sorry, maybe it'll go into like discount of, if you're a fib trader, it'll go into the golden pocket or whatever and reach that, and you know, stuff like that. That's an exhaustion trade. Essentially, right, you're seeing the force and then the lack of force, which is turning it back around. Okay, then you have a capitulation event. This is more or less my favorite one, right? Where and then, you know, that's more or less what I usually see. A capitulation event is going to be force that's following through and pushing throughout the entire move. As we are turning around, we're seeing an increase of volume throughout the entire turnaround, right? That's going to be a capitulation event. And so, like I said, exhaustion is more continuation. You want to use the volume in this scenario to verify a continuation, right? Capitulation is an indication of weakness in your trend or a reversal, right? Because I see all the time, you know, you'll see capitulation and then it's not exactly the reversal, right? It's just weakness. Now, if you see massive capitulation, then it's probably going to reverse, right? But sometimes it doesn't, right? Sometimes you see the capitulation, there's just profit taking, there's et cetera, and then it goes back into a point where maybe force wants to come in then, or maybe you have exhaustion and then an unexpected seller comes in the market and flushes it lower, you know. So things can happen in the market. This is not, you know, these aren't golden, you know, laws that they have to follow, guys. The market is never like that, right? The market has edge in strategies, and this is an edge that I'd like to share with you guys. Okay, so remember, exhaustion, more or less, you're going to see continuation throughout the trend. Capitulation, more or less, you're going to see follow through in the pivot, right? Or more or less, it's indicating weakness of a trend. Okay, and then you just have a regular wall. Okay, now this is a trade. Don't think it's not just because you don't see a, or maybe it's not a reversal or continuation. This is still a trade, right? Sometimes the market can come down, right? And it's whatever average volume, boom, it hits a wall, boom, it's trying to take the wall out and it just can't. And then it goes into, you know, etc. Whatever reason, whatever it does, maybe it'll go into an exhaustion event, or maybe this was some capitulation, right? But essentially, a wall is just a block of momentum. So that's a scenario that a wall could be used. But really, most of the time, it's going to be like this. You're seeing the downtrend, and let's say the wall's like right here. You'll see like a spike in volume at that wall, and then the breakdown of this wall here. You see this leg here actually breaks this wall. This breakdown is also going to have volume, okay? And then it'll continue, and then you might see another wall somewhere over here, right? And the breakdown will also have volume. So until we get to maybe a capitulation event, or this is an exhaustion leg on a higher time frame, right? So now that you know essentially what the three differences that I look for when I'm trading with volume, let's go into some examples. Okay, and I want you to just think for a second when I show you these examples. I want you to just think for a second which one it is. Okay, I got a couple examples here. Just hold on. Let me pull them up. I got a really good one. You're going to love this one. I show this one to everybody when they ask me about this. I show it to them. Okay, check this one out. Okay, what do you think about this one? Okay, is this going to be capitulation? Is this, now I'm specifically focusing on more or less, I'm specifically focusing on more or less this, right? This kind of move that we turn around in. That's even a hint in itself. I'm also focusing on the increase of volume here, right? That's also following this pivot. Right. So what would this be? What do you think? I'll give you 5 more seconds. So this is capitulation, right? Obviously, if you seeing volume coming like this, I mean, look, okay, this is a good way to measure it. If we just take the measurement of this leg, it's almost about the same as that other leg, right? But look at the volume difference. Okay. Look at the volume difference in both these legs. Okay, how do we, we'll just go like this. Look at the volume difference, okay? That's a change. How would you know, and that's the thing, how would you know that something's happening if you're unable to see the volume? Well, you can kind of indicate that maybe since we're going into a level that possibly, you know, I see it's very fluid. Maybe we're going to bounce here on this level. We'll wait for confirmation. But unless you have volume, you cannot confirm before it bounces. We're confirming before it bounces here. 1, this is a capitulation event. 2, there is an inflow of profit taking. And if we see a pivot come in, man, this is great. This is really nice, right? So this is a place where volume really shines. Now, I took this trade on Tesla. Okay, this was such a good trade. This was when Tesla went down to $100 a share. Okay, if you took this trade and you used the capitulation and all that stuff and learned how to read the volume, guys, this was a monster trade. Okay, now if we go and look at essentially what happened, you know, then things happen later, and essentially you can get like this. See the force here, and then you get a die down of force. You see how we're saying with the volume. This is, now we go into exhaustion. So exhaustion's more or less once the trend is set. Capitulation is more or less once we need, or it's a weakness, right? The trend is weakening. This downtrend is weakening. We are reversing. Now we're putting in a real trend possibly, right? So that's a good example of capitulation, and in fact, that's 2 examples there. That's 2 examples: capitulation and exhaustion. Okay, and guys, don't forget, right? The capitulation doesn't have to be cookie cutter. Okay, people are always profit taking and buyers are all, that's fine. So for some degree you might see capitulation, or on a lower time frame, verifying that with the higher time frame you might see capitulation. That's fine, but you always want to size accordingly. It's always going to depend on what you see. If the capitulation is strong, guys, and there's edge in that trade, man, that's great. But sometimes the capitulation is not going to be that strong. There will be profit taking, but it's possibly profit taking in a leg or profit taking in something else, right? Like here's an example. Maybe we could find something here. Like, oh, here's a good example of a wall. See, we hit a wall. We see possibly some capitulation here with the volume. In fact, this is more or less where I do use these volume averages. It kind of makes me think beyond the little volume candles here and see the average volume. What's the average doing? And averagely we're moving up. So yeah, we hit a wall, we kind of capitulate some, but overall in a higher time frame, this was an exhaustion in the down move, right? So that's an example there. I mean, look at the difference in volume, right? Look at that. That's reversal signal. Okay, so let me find one more. I don't want to spoil it. Hold on. I think some are self-explanatory, but I've got some good ones here. Okay. So, let's look at SPY. Okay. I'm going to focus on a couple things here. This. Maybe even this. Okay. Possibly this scenario here. Right? So, I'll give you about 3 seconds. I want you to label each, because each one's different. Just label them. See if you could think in your head which one's which of the 3 that we talked about. I'll give about 5 seconds. Okay, so here we have a wall. Okay, here is essentially going to be exhaustion in a down move, right? Because like if we're pulling up and we're losing force, that tells me that force is in the down move, right? So then we should have seen, remember guys, we should have seen force to actually push this thing down. But in this case, there was not too much in comparison to this exhaustion move. There was only some. That's a start to an indication that we are approaching capitulation. You have to understand. That's big. Understand that, okay? If you can see the volume here, it starts pretty low. Okay? It shouldn't be starting. If it's starting pretty high, it's probably not necessarily gonna be concluding a capitulation event, right? Like if we saw volume here that was just, absolutely bonkers here, and then we were flushing lower, that's gonna be a little bit different. But in this case, volume stayed pretty low here after this exhaustion, and then we started to see increase in volume. See how I'm doing this? Starting to see increase of volume here until overall we see an increase of volume all the way through the pivot, right? So more or less this is going to be capitulation, more or less, right? And this is actually a scenario where the capitulation is decent, but it doesn't follow through all the way. So this might not be officially like a complete reversal, but more or less buyers here were definitely wanting to take control, right? Whether that means shorts turning into buyers, or shorts taking profit and buying back their shorts, or just buyers in general, right? This is an example. Okay, so you can kind of see how this works, and that's the thing. And so you have to realize this, right? I want to make this very clear, because a lot of times you'll hear me all the time in my Discord. By the way, Join the Discord before January 1st, 2024. Before 2024, guys, the Discord is no longer going to be free. Okay, if you're able to just get in the freaking Discord before January 2024, you will have free lifetime VIP access. Okay, you will be in the Discord forever, however long you want. You won't have to pay a dime. Okay, because after 2024, guys, the Discord is going to be a paid subscription service. Okay, so please, if you're watching this video and you're interested in learning about markets, maybe you have some experience in the markets, you're looking for a community, maybe you're looking for education about volume or whatever education you want, we can do it. Okay, join the freaking Discord. All right, so back to here. Okay, this wall here, this could possibly be capitulation on a lower time frame. You have to understand. So time frame definitely matters. Okay, that's why if you're trading on a 3-minute time frame, you don't want to make decisions on the daily chart off the 3-minute time frame. You can probably see what might happen on the next day by today's intraday data, but you don't want to be making long swing trends and stuff, or trades off of 3-minute candles. All right, you more or less want to be looking at possibly higher time frame, like 30-minute, 1 hour, possibly, right? So you have to understand, capitulation, exhaustion, stopping volume / walls, guys, these are things that happen on all time frames all the time. Guys, this stuff is fractal. Okay, so take that into account. Just because you see capitulation on the 10-second doesn't mean the 3 minutes done with the trend, right? It could mean that the capitulation on the 10-second is a wall on the 3-minute, right? Essentially, I try to make that clear when I'm posting some of my trades. I'm like, look, guys, there's a capitulation here. And then some people might say, oh, there's capitulation. Why didn't it completely reverse? Because you're saying capitulation is a reversal signal. Yes, it is a reversal signal on the 10-second chart. That trend that the 10-second chart was in is now over. Okay, we're now going to put in a different trend, and then if we hit a wall on that trend, then we can continue, or etc. But that's something to take into account, guys. So there's no end-all be-all. This stuff is an art, not a science, okay? Anna Culling says it best in her book, Volume Price Analysis. I will shout out that book. If you haven't read that book, that's a fantastic book. Volume Price Analysis by Anna Culling, okay? It's, you find it on Amazon. It's going to be in black and white. I've still yet to find it in color. If you have a link or something you know about it in color, put it in the comments. But that's going to be a fantastic book, okay? Long story short, guys, okay, thank you so much for watching. I hope you learned something. Volume is real. It's not, some people say, oh well, let's actually talk about this for just 1 second, okay? So you say, oh, volume's just, it's the amount of transactions. It doesn't matter. Just because the candle's red doesn't mean that it was selling. That's absolutely correct. Okay, that's absolutely correct. But what we can deem that the bid and the ask are going to give us, they're going to give us clues as to what's happening. So if we have people selling the bid and being all aggressive at the bid, then that's great, right? We know that there's probably more supply than demand there. There's probably more sellers than buyers willing. Because if there was more buyers and sellers willing, behind the scenes, guys, we're talking about poker stuff. People that aren't showing their hands, that are marketing in the order, they might not be showing their hand. All right, or essentially on the chart, maybe this is a supply zone, maybe this is a demand zone. So really, you want to be considerate of that. Okay, the volume is printing red because out of all the participants that have traded in this time period, we sold the bid more than buying the ask. That's why the volume printed red. And that can kind of give an indication that there is more supply than demand at this time period. Okay? So you have to understand that. There is probably more sellers when you see the volume printing red. And it doesn't mean that the participants there are more participating sellers. No, there's equal participating buyers and sellers. Every time you make a sale, you're selling it to a buyer, right? But we can conclude that the reason why the sellers were more aggressive and sold the bid is because maybe there was more supply up in this area, and they said, you know what, I want to get out right now because I think that there's much more supply than demand. So let's get out now. So we can probably determine that there is more supply and demand, or supply than demand, in this area or this time frame or this candle, right? We can determine that. So anyways, thanks for watching, guys. Reminder, join the freaking Discord, okay? You won't regret it. We're a community of traders that are all willing to learn and all be degenerates just like everybody else in the stock market, right? So please, 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 I hope you had a good video session here learning about volume. Okay, any questions, leave it in the comments or join the Discord and ask away. Okay, have a good one. See you next time.